Hi, I'm Keith Schaefer, and I want you to mark down Monday, May 12th on your calendar, because that's the day that one of my favorite junior oil stocks will be reporting its next quarterly results. And I expect them to be a barn burner, for three reasons. One is that oil prices have held up very well, better than I expected, and number two, particularly heavy oil prices have really done well this year, and that's because of crude by rail. We've been able to ship oil all over North America by rail, which has really made a big difference for the heavy oil producers in Western Canada to get their product to market in a very timely and cost-effective manner. So that has been a big surprise over the last year, and 2 years ago you saw heavy oil having huge discounts to light oil. That doesn't happen anymore. You're seeing very tight differentials, it's called, the difference between the light oil and the heavy oil prices. And you're seeing oil flow very smoothly all across North America right now. But I think the big reason, the third reason, that these results are going to be so positive is because this company just has fantastic wells. They're low-cost wells, which are really important for a junior, but also they pay out in mere months. These wells are able to pay back their entire cost in 6 to 9 months, and that means that this company can use that money and recycle it back into drilling new wells. And that means they can do this without having to issue new equity or increase the number of shares outstanding in the company or add on any new debt. So that means that you're increasing the value per share. And really, it's the per share value growth in these juniors, which is what the market pays for. It's all about the per share growth in production and cash flow. And that's what this company is delivering. In fact, this team has done such a good job with their assets that they've increased their guidance to the market each of the last 4 quarters. So that means that every quarter they've given the market an idea on what they should produce the next quarter or 2 quarters from now, and every quarter they beat that and upped their guidance even further. And what that has meant is that even though this company has grown so much, the stock has barely kept pace with the growth in production and cash flow. The stock is actually trading at a very similar valuation today what it was 7 months ago when I first discovered it. So that, in my mind, is a big bonus for shareholders looking at the company now. But Monday, May 12th, they're going to give us the real goods. And I think it's really important that new people who are interested in looking at a junior stock in this kind of market that's been very hot, very strong, pick a company at this stage that has incredibly strong fundamentals, and that's what this company has. Even though it's one of the top growth stories in all of North America over the last year, it actually, as I said, trading still as a value stock, one of the lowest valuations in its peer group. In fact, the research that I've been reading this last week suggests it's trading at about 54% of its peer group valuation. When I can buy a top growth stock with incredible fundamentals at only 54% of the trading value of its peers, I get very excited. And I think the next milestone for this company is going to be Monday, May 12th, when they report their quarterly financials. Now there's a couple other things that I'll be looking for in this quarterly. One is that they recently announced they discovered a new oil play close to, basically in the most valuable oil formation in all of Canada right now. They have a huge land position there, and I believe that over the next 2 to 3 quarters, they'll develop a multi-year drilling inventory. They've already given us 2 quarters of updates on the initial stages, and everything is going according to plan. The industry has a certain amount of oil and cost that they expect out of these wells, and this company is meeting that. So with another quarter under their belt in developing this new oil play, I really think the stock can play catch up to its peers, and it's got all the fundamentals behind it. And one more thing that I really like about this company, it has less than 50 million shares out. So any increase in cash flow or production gets rewarded immediately. When you're looking at a stock with 200 or 300 million shares out, like a lot of the Canadian juniors has, it's really difficult to move the needle on the stock unless you have an incredibly large discovery. But when you've got less than 50 million out, you can see the stock get rewarded very, very quickly. So I'm as keen on this stock as I was 7 months ago when I first bought it. And this is a great stock for people interested in subscribing to our service, the Oil and Gas Investments Bulletin, because it's the perfect type of stock for what we do. We find something that's growing at a very fast rate, has a discounted valuation, quality management. I call the management teams directly, get their take on what's happening, and then I canvass the street. What do the analysts say? What do the institutions say that are owning the stock? What's management's reputation on the street? So all that goes into my decision, and if the stock meets all that criteria, and this one does, then we alert subscribers on it. So I urge you to read my new report on this company, risk-free. I've updated it now, and it's a great unbiased report on what should be happening, what has happened over the last year, and what should be happening over the next year. You can access this report risk-free by clicking on the button below. But don't delay. The next bit of news is out Monday, May 12th.